This ain't advice. I'm not your advisor. And as they say in the biz, slap that subscribe button. We're only about 100,000 away from 1 million. We're almost there. Always remember to expect the unexpected. Today, the unexpected is a Gatorade. All right. Advantages or disadvantages for an independent contractor to register as an LLC. Is it even something worth considering? Probably not, but let's keep reading. The last 7 years, you've worked as an independent contractor, 1099. Every year you owe a lot of money in taxes. Yeah, it's because independent contractors, the company doesn't withhold for you. You need to be smarter and save money for tax purposes. However, you've not been able to do that yet. Okay. The question is this. Is it possible to establish an LLC to bill your employer and avoid paying so many taxes as an independent contractor? No, it's probably not. This is not tax advice, but there's almost never in practice a difference between just filing on your own Schedule C, which is where your 1099s would end up on your tax return as an independent contractor with a 1099, or if you just did the same thing through an LLC. In fact, most single member LLCs are what's known as disregarded entities. That's probably obvious. They're disregarded. They just flow straight through to your tax return. What other advantages would this offer you? Would it cause any problems? Can't think of any problems it would cause. If it keeps going, establishing an LLC is a good practice. I mean, only because it limits your liability. But it probably wouldn't change anything tax-wise. There's like a couple exceptions. Like maybe being an S corp. But you would need to talk to a CPA about whether there's another way to do it. If you got a lot of expenses and if you're making a lot of money, maybe there's a way to incorporate where you could pay yourself some profit or dividends, basically, rather than wages. But that's getting pretty complicated, and if you're not even saving money to pay taxes, you're probably not at a point where you're ready for that kind of complication. But no, registering as an LLC is probably not going to save you anything in taxes. There's not a difference. There's not like something that smart people are doing. They're just not paying taxes, but because you haven't done it, you owe a bunch. So you can feel better about that. Investing versus student loans versus retirement savings. 35, semi-recent tech graduate. You've been working at a FANG company for 3 years. You're not going to tell us which one. Okay, that's fine. You're in grad school. You didn't make much money. You have questions. You've been able to save a fair amount of money and start contributing to the 401k, but you're kind of lost. Particularly with regards to investing versus paying off loans versus retirement savings. A large portion of your salary comes from RSUs. It sounds like Amazon to me. Here's a quick summary. Total comp is 178K base plus 70K RSUs, give or take. Monthly take home, 7K, 3K before food, because you're paying 4K in rent. Is that what you're telling me? I'm a little confused how we went from, okay. Well, 7K of monthly expense. I don't get it. Your monthly take home is 7K. Okay, this is the colon. So you take home 7, monthly expenses 3K. So 3K is rent, and then food, leisure, etc. So you're left with like another 3K. You've confused me, but I think I got it. 401k, 4% match. You're putting in 11%, so you're 15. Not bad at all. You got 54K. It's in a 2050 target fund. Yeah, very, very reasonable. Stock. You got 42K in company stock and 128K that's going to vest. Be ready for the taxes. That's going to be income when it vests. Loans, 24K at 6.5. Going to be paid off by 2026. Okay. You got another 17K also at 6.5. Not bad. And then you got some cash, checking and savings. No credit card debt. 20K recently came in from divesting a bunch of your RSUs. Should use that money to pay off loans or reinvest it to keep it growing. Current level of pre-tax should max out your 401k. Should you start contributing more into some kind of IRA? You could probably do a backdoor Roth IRA, which you need to look into. If I were you, I would look into a backdoor Roth IRA and consider doing that. And you could do it for 2019 as long as you do it before April 15th. And then also you could do it for 2020. And basically the way that works, you'd be able to put $6,000 into a Roth IRA. It doesn't save you anything on taxes, at least not right now. But that money will basically never be taxed until you, even after you go and spend it in retirement. So it was quite nice. As a rule of thumb is what to do with vested RSUs when such a large portion of your salary. There is not a rule of thumb. At least if there is, I've never heard it, and I see these things all the time. So that's always a tricky question. It's always going to depend on your personal situation, but I think it looks like you've already started to diversify a little bit. That's a good habit. People get in a lot of trouble. You get in a really sticky situation where there's no great decision to make if you don't. Of course, there's stories of it working out really, really well to keep it in the company stock, but the stories you don't hear are the opposite, and they certainly do happen even at really big companies. So got to come up with a plan. As far as the specific question, so you said investing, student loans, retirement savings. So retirement savings is pretty straightforward. You're maxing out the 401k, which is great. You can put another $6,000 into the Roth IRA. You got to do it via the backdoor Roth IRA method that we discussed. That you'll have to look up. And there's probably no other avenues for retirement savings for you. So you can just save and invest in a taxable account. Just like your RSUs, those stock units are just taxable units. You can just open a brokerage account somewhere, Charles Schwab, Vanguard, Fidelity, Wealthfront, Betterment, whatever you want, and you can invest there. It won't be a retirement account, but you can still be saving for retirement. The student loans at 6.5. It's a pretty attractive thing to pay down. I would be very, very tempted to just pay that down next. Maybe use the cash that you got on hand. It doesn't seem like you have a big need here. Maybe use that to make those 2 backdoor Roth contributions. Again, one for 2019, one for 2020 that we discussed. And then from there, paying off the loans pretty aggressively and coming up with a plan for all those RSUs that are going to vest. And then from there, just figuring out what you want to save and invest in a taxable account. And then maybe you want to start building up more cash for like a down payment on a house, something like that. I don't know. But seems like a good start. Seems like you're doing a really good job. Excellent work. Former company contributed too much to 401k. You received a notice in the mail that your former company made a true-up contribution to your 401k last year, but the calculation included compensation was ineligible for matching. You rolled your 401k into an IRA with another financial institution. They're saying that you must return the excess contribution amount plus the earnings. They do mention that you can provide the notice to the new institution for them to liquidate the funds and send the check. In the meantime, they're issuing a corrected 1099-R and 1099-MISC. Once you get the check. Okay, here's a question. How do you ignore the letter? All right. You need an attorney. This isn't legal advice. But in general, when you get overpaid, you do not get to keep it. It's owed back to the company. But nobody can say what will happen if you just ignore it. And I think it's a little weird that they want the earnings. That strikes me as very strange. Very unusual. Maybe it has something to do with the ERISA rules that govern the 401k since it was an excess contribution or it's a contribution that's being removed. Maybe they have to kick the earnings out. But, I mean, would they take the losses if there were losses? That That part's confusing to me, but I have no idea what will happen if you ignore it. Generally, when something like this happens, someone gets overpaid, you still owe the money. You don't get to keep it just because somebody made a mistake. But nobody's going to be able to tell you what will happen if you ignore it. I don't know, how much money are we talking about here? Is it like $20 or is it like $2,000 or $20,000? That's going to make a difference probably. But yeah, you might need to talk to an attorney if you're really thinking about ignoring this. Good luck.